multi-billion-dollar solutions for the commodities crunch. For anyone taking an overseas trip, the falling dollar is adding to those credit card bills. But for parts of the battered manufacturing sector, it comes just in time. The Aussie dollar has plunged from parity with the greenback to 69 cents US. Today, NAB's Business Conditions Index hit its highest level in 6 years, a result driven by the weaker currency. Neil Woolridge takes a look at some of the winners.
It's been a tough time for manufacturing in Australia. The dollar spent 2 years at or above parity with the greenback, making local exports less competitive. And while many businesses shut up shop or moved offshore, those who stayed are now reaping the benefits of the dollar's recent plunge.
So we've been busy preparing for this, and now we have to really gain the yield or the benefits of those disciplined years of work, and that's what you're seeing with our record profits and performance and cash position.
Compumedics makes sleep diagnostic equipment in Melbourne's inner suburbs. The company hatched a 5-year plan to survive, even if the exchange rate stayed at parity. But with the dollar below 70 US cents and predicted to fall further, Compumedics is hoping to double sales in its biggest markets, the United States and Germany.
We were in a tough position because 90% of our business is export, but we leaned down the business using some fairly conventional but tough mechanisms, tightened it up, and now we can benefit going forward, and anything below $1 for us is a bonus.
Last week's national accounts showed anemic growth of just 0.2% in the June quarter. But the Australian Industry Group's chief executive, Innes Willox, says its August surveys are showing robust recoveries in manufacturing, services and construction. And supporting that case, NAB's Business Conditions Index has just reached its highest level in 6 years in trend terms.
I think we're starting to see some green shoots there when it comes to exports. We've seen that through some data we've released just in the past week or so around manufacturing and services sector, both of which have been in positive territory.
International education is another industry showing early signs of recovery.
We've had a 14.8% increase year on year in June 2015 compared to the previous 12 months. That's mainly in the higher education area, but increasingly in the vocational education and training area. We're finding that we're getting larger numbers out of China, out of India, Vietnam.
But Phil Honeywood says, like many other businesses, the $18 billion market is being affected by the high cost of doing business in Australia.
The living costs in Australia are prohibitively high compared to a number of other competitor student destination countries, and so we find that, of course, in Australian dollar terms, the cost of accommodation, the cost of food and entertainment are still quite high.
And the dollar's fall is not good news for everyone. A 30% drop in the currency means a 40% increase in the Australian dollar price of any product or component that local businesses import.
A lot of Australian businesses were in many ways forced offshore to run some of their manufacturing production operations offshore and then import it back into Australia. Those sort of businesses are being hurt by the lower dollar. That's why you're not getting a uniform outcome of a lower dollar.
But whatever boost comes from the lower dollar, it won't be enough to offset the drag on national income as the mining boom continues to unwind. Both Treasury and the RBA are now tipping an extended period of below-trend GDP growth. A large part of Australia's manufacturing base was hollowed out with the dollar at or above parity, and the major car makers will all be gone by 2017, taking with them up to 200,000 direct and indirect jobs. Still, David Burton says there are opportunities for those who want to invest in local production.
We've got a hybrid balance there where we're still manufacturing with partners in Australia, but partners that can do it more efficiently and effectively so that we can compete. So it's not all lost in that regard.
Signs of life in a sector which not so long ago seemed headed for an eternal slumber.